Are you a surgeon and tired of operating on people like that outdated operation game, you stupid little bit? Then man, have I got something exciting for you. The technology I'm about to show you is gonna make your current surgical tools and technology look like that of an 18th century plague doctor, or maybe a witch doctor or something. So while you're having fun exercising demons out of your patient's blood, I'll be living it up in the 22nd century with this stock pick. Today, I want to talk about an exciting penny stock that has a huge amount of growth potential. The company is called Asensus Surgical and trades under the ticker ASXC. And this is a pretty exciting company that I've had my eye on for quite a while now. And I'd like to discuss what makes this company stand out in a sea of other penny stocks out there. So this is a company that was founded in 2006 and has their headquarters in North Carolina, United States. Asensus is essentially looking to digitize the interface between the surgeon and the patient, pioneering a new standard of surgery for increased control, less variability, and consistently superior outcomes. And they plan on doing this with their Senhance robot, which I'm not gonna lie, there's just something goofy looking about this setup. Maybe it's just me, or maybe it's because the surgeon looks like he's about to start up a racing game. But regardless, this goofy looking machine has actually received FDA clearance in general surgery, and that was back in March of 2021. And this is pretty huge, because for any medical technology or biopharmaceutical company, the single biggest hurdle to the mainstream markets in the United States is that FDA clearance. So that's a huge win for this company. But taking a look at more specifically at what this company does, like I mentioned, they sell advanced medical robotics technology to hospitals. And specifically, they're looking to improve minimally invasive surgery through a new category of care called digital laparoscopy. And essentially what this is a type of surgery using minimally invasive cuts and cameras. And for Asensus, their surgical system they've created is going to perform those kinds of surgeries. It's composed of independent robotic-assisted arms and a mounted screen with cameras, which would allow surgeons to have some incredibly accurate and fine movement when performing a procedure on a patient. So if digitizing the interface wasn't cool enough, that's not all their technology does. The system also has artificial intelligence capabilities baked into it, allowing doctors to overcome the current clinical, cognitive, and economic shortcomings in surgery. You know, human error. The system features the first machine vision system for use in robotic surgery, which is powered by their trademark technology called the Intelligent Surgical Unit, or the ISU, that enables augmented intelligence in surgery. Their Senhance surgical system brings the benefits of digital laparoscopy to patients in more than just the United States now, as their products are now available in the EU, Japan, Russia, and some other select countries as well. So that's pretty cool, right? This is a very innovative company that is creating these incredibly complex machines that'll hopefully make surgeries not only easier, but more successful. And I think this company is paving the way for technology that is going to be commonplace in the medical industry 50 to 100 years from now. So if that's the case, why does this company only have a measly $680 million market cap? And why is this company just seeing red after red day? And to answer that, I just want to say that even though this stock has seen a lot of red recently, its lowest price point was this year in April, $4.20 if you want to be specific. And since then, the stock has actually began a bullish trend again. So let's actually take a look at their financials. First, this company's most recent quarterly results were released on May 11th, and for the quarter ending March 31st, 2021, Asensus reported higher revenue, $2.1 million to be exact, compared to the prior year's quarter, which was $600K, which is a huge increase in revenue, which of course is always awesome to see. And in the news of its inclusion in the Russell 2000 Index, and with the uptick in hospitals signing up to lease its flagship Senhance robotic surgical system, it's not hard to see why sentiment has shifted so quickly from negative back to positive. I think overall, investors are bullish again, and the company just continues to release positive news, which is why we could even see a return to prices where it traded earlier this year. That would be as much as around $7 per share, which is more than double today's prices. Still though, trying to recover from its past stumbles, the investor sentiment for this stock could revert back to its prior negative status just as quickly, I'm thinking. Even though this company has a pretty strong balance sheet with very low debt, I'd still advise caution with this one. That being said though, this is still a company that I'm really excited about and has a ton of growth potential. Just understand that investing in this kind of technology now is similar to investing in any new frontier. There are risks, of course, but if this company actually ends up being a leader in the space, the rewards will be massive. And with that said guys, thanks as always for watching my video, and I'll see you next time.